Hello, everybody. So today, Datadog reported its earnings, and Datadog did really well. It beat on both the top line and the bottom line, as it did for the past 4 quarters. Datadog keeps beating analysts' consensus. They keep beating. Why do they keep being so good? Well, they're so good at their earnings each time, Datadog, because they engage in this practice called sandbagging. What is sandbagging? Right? It's a strategy of lowering the expectations of a company relative to its strength or core competencies in order to produce relatively greater than anticipated results. And they've been doing that throughout 2022 because 2022 was a very tough macro year, and they wanted to make sure that they're delivering and not disappointing the market. Because in 2022, whenever a company disappoints the market for something like a penny on earnings per share, the stock goes down 20%. Right, that was some of the madness that we had in 2022, the turbulence. And it looks like Datadog has decided to keep going with sandbagging in 2023. And so the market today reacted negatively to their guidance because they gave a very poor guidance, in my view. And that guidance does not reflect reality. So this company is likely to keep beating its earning over and over and over again throughout 2023. And I believe we're likely to have a series of consecutive beat and raise guidance quarters for Datadog. And analysts, listen to the call a little bit. Analysts don't buy it. Analysts don't buy Datadog's poor guidance. There's plenty of companies that give poor guidance, and analysts are knowledgeable about this. But, what's an example? For example, Tesla. Let me give you a clear example of a sandbagging company right there. Tesla, on the call, right, 4 weeks ago, they said, we'll make 1.8 million cars. And Elon kind of laughed on the call, and he was like, yeah, we're really going to make 2 million, but we said 1.8 million to be conservative. And of course, if you look at Tesla, if they made 1.8 million cars in 2023, that would mean that they would grow at 2.5%. Because in Q4 of 2022, they were already running at a run rate of 1.75 million cars. So nobody's buying the poor guidance of Tesla. Cloudflare did the same thing recently. No analysts didn't buy it on the call, and nobody's buying the poor guidance of Cloudflare. And I am not buying the poor guidance of Datadog. I'm just not buying it. Companies, even if there is a recession, they just don't decelerate that fast. So after starting fiscal year 2022, right, Datadog at 63% year-over-year revenue growth against fiscal year 2021. Tremendous revenue growth. That's per the numbers they just announced this morning. So they did, in 2022, they did 1.68 billion for the full fiscal year 2022. And now they're guiding for only 2.08 billion for fiscal year 2023. When you calculate that would be 24% revenue growth. So they're guiding very, very close to my threshold here. But who's buying such a tremendous deceleration in growth, right? Who's buying that? Well, few people, I believe, because this is sandbagging. And let me show you this with numbers. Datadog has a history of doing that, right? This is their history of sandbagging. They guided Q1 2022 to 378 million, and they ended up doing 406, right? Then they guided in Q2 of 2022 for Q3, they guided 412 million, they ended up doing 437. Then they guided 347 million, they ended up doing 469. If you average it across these quarters, you have an average sandbag of 6% per quarters. Now, keep in mind, this is going to compound. Like if they do a poor guide for Q1 2023, then another poor guide for Q2, for Q3, for Q4, you're getting compounded sandbagging. So if you adjust up each quarter, you end up with the communicated number here being much lower than the terminal run rate. And if I calculate the run rate, i.e. the revenue run rate, if you annualize it at the end of 2023, at the end of 2023, if we were to annualize it, after adjusting for typical sandbagging of Datadog. So if you adjust it 3 times for typical sandbagging and you end up calculating the number at the end of 2023, you're getting at a 47% growth run rate at the end of 2023. Now, in reality, of course, you're not compounding every single quarter. Of course, Q1 is not going to be compounded like Q4. But in reality, that's probably, in my view, no investment advice, no prediction, but it's probably going to be between 35 and 40% growth for a full year of 2023. So heavily sandbag compared to what they're announcing, and who knows, they may beat even greater to the upside, because it seems to me like the guidance is very low for a business that keeps winning. For example, in their guidance, they didn't assume companies with more than $1 million in sales, they didn't assume that these would grow, for example. There's plenty of assumptions. If you listen to the call, the analysts are not buying it. So now that I've addressed, guidance and revenue growth, we can just get back to what that means for Datadog and how well Datadog is doing. Let me show you. I have compiled with the 469, that's the latest revenue growth we just had. I mean, does this look like a business that has slowed down in 2022? If you do, Q1 of 2022 to Q4, to me, there is no slowdown. There is no steepening, and we are in the recession right now. So I believe these numbers are gonna keep going in the same direction, and that is because Datadog is a fundamentally strong company. Yearly and quarterly fluctuations may help us in the short run, right? They may help us in the short run evaluate whether the stock is overvalued or undervalued. But the main thing that matters is for me, for this stock, I'm looking at 2030. And in 2030, what is revenue going to be in 2030? I mean, even if the company were to grow at the sandbag 24%, which I believe will be closer to 40%. Now, let's imagine if we compound that, how large the revenue is going to be in 2030. And then you put a multiple on that revenue in 2030. That is the proper way to assess a stock like Datadog. The problem is that there's some uncertainty about what's going to go on in 2030. But Datadog, and I'll conclude this video with this, Datadog is different from all of the other SaaS apps. Datadog is a monitoring platform, monitoring and security platform, right? It's related. It's a monitoring platform for all of your other cloud applications. They can monitor and connect to up to 600 different SaaS applications, right? Some of which you have drawn right here, right? They can connect to those. So as organizations become digital machines, increasingly become digital machines, businesses need to monitor their security. They need to monitor their infrastructures. All of these apps are connected to each other through APIs, right? The business is a stack of apps building with each other on top of each other. And you need something to monitor what's going on all of these apps. That's what Datadog does. Datadog is the dashboard, right? The best analogy I have for this is the car dashboard. This is the Datadog dashboard where you see all of the apps and all of the performance, and you can see how it's doing. You can see events, security events, log events, any problems in performance in your applications throughout your SaaS, throughout your enterprise. You can monitor with the Datadog dashboard, a dashboard that they provide in the cloud. Okay, so that's the mega trend, right? Datadog monitors your enterprise application, lets you know when something is wrong. It allows you to address problem, whether it's maintenance, security, performance. You address them before they become major problems. So Datadog is mission critical for the modern enterprise. It cannot be easily replaced. The best analogy that I found to describe Datadog is that of a dashboard. This is a dashboard of a typical car. Dashboards warn you before problems arise, right? Check engine light, low fuel lights, hazardous roads light. All of these lights help you monitor your car and the different parts and components of your car. Just like Datadog helps you monitor hundreds of cloud apps that you're having in your business and over infrastructure metrics. It helps you monitor them and alerts you whenever there is a problem. This business is mission critical, and that is why, if you go back to their latest investor presentations, you will see that the total addressable market is at least a 20-fold from what they have right now, and that's in 2025. So in 2030, could this addressable market could be 100-fold from here? No investment advice, but I believe it could, because cloud is really, really growing extremely fast, and we'll have more clarity as we go through the quarters and through the years with Datadog. But Datadog is one of my top positions. To me, it is a long-term hold. Companies cannot do without Datadog. They have a very moaty position. They have a strong moat in that they are the monitoring app. They are the app where you monitor all of your apps, the app to manage all apps. And I believe from that standpoint, Datadog is a fascinating company. Anyways, this was not investment advice. This is just entertainment. Thank you for watching. I appreciate if you can like the video. It really helps me out. I appreciate if you can subscribe. Thank you very much and have a wonderful day.